So good afternoon, and thank you to the audience for joining us. My name is Luca Gori. I'm a corporate partner in the London office of DLA Piper, and with me I have Alokik Advani, who is the managing partner of Fidelity International Strategic Ventures, and I have Ben Lackett, who is the Chief Innovation Officer of Aviva PLC. You know what the panel is about, and when we talk about relative is whether, to what extent should CVC stay relevant to the parents' sector and experience when looking for innovation in their investments in order to make the world a better place. If we could start with perhaps a brief introduction about you, Alokik, as to what you do at Fidelity, and then Ben.
Sure. Thank you, Luca. My name is Alokik. I look after strategic venture investments for Fidelity International, squarely in the fintech space, focused largely around tangential elements to wealth and asset management and everything that touches that space. So very much related to the corporate, related to the parent. Two dimensions that we look at: strategic impact, financial returns, and both have to work before we make an investment. And hopefully they work when we exit as well.
Thanks, Luca. Ben Lackett, Chief Innovation Officer at Aviva, the insurance company. So my accountability is for venturing. So we have a CVC, Aviva Ventures, a fund of funds and other strategic investments on one side. On the other side, my role covers internal innovation, which is really about rapid proposition development and looking at solutions for customers that are beyond, just tomorrow, so looking longer term. On the venture side, we make direct equity investments around the Series A, B mark, investing up to about 5 to 10 million in portfolio companies.
Thanks for that. So if I could start with the first question, which is how has making the world a better place or focusing on SESG affected your organization or changed the way in which your organization operates? Would you like, Ben, to start us with that?
Yeah, thanks, Luca. I mean, I think without sounding glib, I guess it's really at the heart of what we do from an Aviva perspective. Our purpose is with you today for a better tomorrow, and that is really about how do we create a better future for our customers. At the organizational level, that has translated into our sustainability strategy, which has three elements: acting on climate change, building a strong and more resilient Britain, and embedding sustainability in our business operations. So very much at the core. I'm conscious that, with what's going on in Glasgow, etc., it's very much of its time. However, we've been looking through this lens for a long time. We appointed a chief responsible investment officer about 15 years ago at Aviva, so it's very much been at the heart of our strategy. From the venture side of things, I think probably a couple of comments on that. So we, from a funds perspective, are actually actively looking at the moment to deploy capital into, I guess you call it climate tech and venture on the sustainability agenda. I think we're hitting quite a rich seam of new technologies in that space that are really going to impact going forward. And if we're going to meet some of our targets, actually taking carbon out is going to be key to that. We were the first financial services company to set a target of net zero by 2040 and within our supply chain by 2030. So we're supporting that through the venture investment that we make. And I guess at a broader level, when we look at portfolio companies and we look at potential investments, I mean, it would be the same for most people, but we get excited by teams that really have that passion and purpose about making the world a better place at the heart of what they're doing. And most are looking to solve a problem, and that problem generally translates into that better environment, that better world. So I think for us, it's very much at the heart of our purpose and runs through our investing strategy.
So I would say that it has been a significant change.
I think you could say significant, Luca,
And what about you, Alokik? You act for one of the oldest asset managers that there is in the world.
Yeah, it's an interesting one, right? And I feel like I don't think you can cross the street without ESG sort of smacking you right in the face across any sort of part of financial services today, right? So, and it's been that way for a little bit. I feel like it's reached an absolute peak over the last couple of years. Again, very much core to the core strategy of Fidelity International in terms of its engagement with companies that are investments as an asset manager, in terms of its engaging internally, diversity issues, social issues, climate impact. I mean, there's a whole slew of different topics and changes which, there's enough public information around. But bringing it back to the point that Ben was making as well into venture, it's, while you were speaking, I was thinking a little bit about when we're investing in financial technology companies, at least on our side, making the world a better place is kind of a big global ambition, but many of them are making your life a bit easier, to be honest. And I don't know how many of them are sort of reducing carbon emissions or, I don't know, creating some phenomenal new product. This is financial products, right? So, but the things that can resonate is the ways in which these companies are built, the ways in which they're run, the management teams that have the right ethos and the impact and the thought around it, right? So, we invest early as well, everything from sort of Series A, B, C, and quite flexible from check sizes of sort of $1 million up to 30 million. And so the ability to create an impact there is almost holding the venture companies to the same standard that we would hold the public companies to as an asset manager, right? So we would go out to the venture companies and do similar surveys from an ESG perspective. What are your policies? What are your procedures? How are you benchmarking versus peers? How are you scoring on those scales? And then do this on a repetitive basis to ensure that they've got as robust practices and don't have a different scale of sort of achievement or measurement versus what the public world looks like or is held accountable to, right? I think the other dimension that's interesting is affording end investors a voice. Either it's an access to certain products that they may not have been accessing to, or an ability to provide their vote or their thought on a particular issue in the same way. So these are all technologies that we're looking at and very much in the center of to sort of help make the world a better place. So.
Thank you. It seems to me that both organizations are actually trying to drive making the world a better place and focusing on ESG proactive means. Now, if I can just a variation on the subject and speaking selfishly, I actually have a pension with both Aviva and Fidelity. And is there a tension, towards the interest that I have for the pension to make a profit, to grow, compared to just making a world a better place, which may mean that maybe you don't make as much money as I'd like you to do?
It's a really good question, right? Would you like to go first?
Go for it.
It's a really good question. I think the two have to go together. Right? There's no point doing one or the other, otherwise we're failing as an organization, right? So you want to do responsible investing. And so let's take a pension example. So we have a whole series of workplace customers, as does Aviva, as does L&G and others. And the notion that you need to make a return is somewhat bounded by regulation. And that regulation is opening up with the notion of a long-term asset fund that will give you better yield and duration in illiquids or private assets and others, which should make up that portion of your pension as well. And at the same time, it's the impact, right, and the voice. And so that same notion that our portfolio managers will go out and talk to people in the large behemoth public companies and say that these are the things that we care about and we'd like you to take some action against it. Well, it's the same principles that should apply even for you to be able to express your voice. So we're looking at technologies to help you with that as well, right? So there is, it doesn't mean that you as an individual pension holder should have a different bar in terms of your reactions, engagements, access to products that, again, might come under the SESG umbrella.
Thank you.
Yeah, I mean, I agree with all that. I think it's important, I think, to have that baseline, and those two things are, not always in conflict. If I think about, so we made an investment in a business called Wealthify, and we did a majority, and then we actually acquired the business about 18 months later. And part of their product set, they started with the standard ISA and GAI product, and then created what they called an ethical ISA. And actually, if I look at their performance like for like today, the ethical product outperforms the standard product, or Anyway, so I think those two things are not necessarily in tension, but I think transparency is really important, and helping customers understand where their money is invested, and to the point already been made that you are also able to give customers a choice. And I think we see a future where you're not going to create non-ethical or non-sustainable products, but in the same time, you can engage the customer in the choices, give them a voice. And we've been piloting some technology in Aviva Investors, which is our asset manager, that really helps bring that to life as part of customers' products. I.e., where does that money actually get invested? It's often quite challenging from a traceability perspective. If you it can get quite complicated. But bringing that out for customers, I think, is really important. And we're seeing that demand growing. So we did some what we call smoke tests recently, which are where we create propositions in a week and put them out into the market to test appetite and engagement. And we found that what we were calling an ESG pension was actually the most popular test that we did over those 8 weeks. We did 7 tests in 8 weeks, and that was the one. And there was a very high engagement, particularly in younger customers. And I think these things become standard and embedded, and I think we're moving into a world in which that type of transparency and sustainable investing just becomes the way we do things.
And for the record, I'd like to say that even though I asked the question to provoke an answer,
it's done better. Is that what you're saying?
Well, I don't look at it that closely, but I want to say I wouldn't like to have profit, by logging the rainforest.
Mm-hmm.
So, Ben mentioned Wealthify. Alok, do you have any examples under your leadership where Fidelity has invested in, with the purpose of innovating and making the world a better place?
Yeah, I mean, similar to what Ben was talking about, right? We invest in a platform that's offering you the ability to, take your ISA money that comes on a regular basis and invest it into sort of ESG products, right? So a platform called Moneybox in the UK that's letting you do that and letting people start with £1, right? You don't have to have 50 grand before you can do it. You can start right away. So we've done things like that. We're working with a similar digital advisor in India that's sort of much more sort of inclusion-based, because again, it's going after a much broader audience. They've just partnered with Amazon to go even deeper into all of Amazon's client base of, sort of 30 to 100 million, depending on where you take Prime users and beyond. So there's a few examples of some of these which are, making the world a better place. But then I also feel like there's some companies which we have to be careful of this notion of greenwashing a bit, which is, okay, you've got the ESG product, and let's scratch the surface and go a bit deeper what's really within it. And, it's not always coming up what you want, right? So then the future state of the world could be something which you were alluding to, which is this notion of giving the client choice in what they want, which is this notion of hyper-personalization. Like in everything else you have, right? You may like, Amazon and not like Facebook, and you may like Netflix and not like Google, and whichever. So can you pick the bits that you like that make up your portfolio in whichever wrapper that it's in a very personalized form, the same way that you get offered that same choice in every other thing that you engage with in today's society, right? So that notion can have a flavor with an ESG lens on top of it, but let you choose bespoke pieces of what you care more about, right? Someone may care more about an environmental impact, someone may care more about a social impact, someone may care more about governance in companies. So you can be able to sort of amplify that wherever you want to with the flexibility of the wrapper. And that wrapper currently on that hyper-personalized basis is probably most prevalent in the US these days, just based on the market structure. But the future of its ability to be prevalent globally is really, really important.
Interesting that both of your organizations are investing in similar space in terms of trying to give the choice and testing what the customers like. Now we looked at the things you have invested into. Are there any instances where you pulled out of investments because you thought actually this is maybe financially a good investment, but I don't see it making the world a better place, or it doesn't quite satisfy my criteria for SESG or something similar.
Yeah, so I mean, I think... Oh, is that me, or...? The impact of the answer was so big. So I can think of an example where we haven't invested in a company because the values of the teams didn't align with ours. And I think, we talk about all the different aspects of why we as strategics invest in companies. But when it comes to it at an earlier stage, for me, more than half the decision is really around the people and the alignment of interests and values. And there was a company, and obviously I won't go into the detail, where the investment proposition was a good one. But we felt, having dug in and spent time with the founders, that there was a misalignment of values, and therefore we chose not to invest, because I think ultimately, if you can't work with the founding team or vice versa, then that investment's not going to be significant. And I think, just building on that, going back to a comment around earlier, which is kind of the G of ESG, I think even though you're a small and a startup company, thinking about your governance in a way that is strong, ethical, efficient, with the future in mind from the beginning is really important. And I think the other area we've haven't pulled out but struggled with sometimes, although you could say this because we're a big corporate and we're quite governance heavy, is where businesses at an early stage are kind of not set up in a way that enables success. So I think in that case we work with companies, and that's one of the things I think we can bring to the party. But in the other instance, it was really about values rather than the proposition per se. I can't think of a specific example where we haven't invested because that company is not solving a good problem, because we probably filter those out quite early on.
No, I think it's similar, right? I think the first point around the team and governance is important, right? You can often feel whether there's going to be a governance issue here, and whether the leadership there, the C-suite, whatever they are, even in a small team, has the experience, has the vision, and is able to execute it. And that's when would be the first blocker. So I totally take your point on the team. I think the other one, as a strategic investor, is being realistic about the time frame of when you want that strategic benefit to manifest, right? Sometimes it's here and now, sometimes it's way in the future. But honestly, having that alignment to the company is important, because otherwise you can really screw up the company, right? If they're very young and not ready, and you're sort of taking them through your bureaucracy and enterprise risk and blah, 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 I mean, this company will die. So being honest about that screens it out as well. As another reason why we may not do it. And then you've got topics which create, either, Marmite type reactions or things like crypto, right? In financial services, regulated financial services, crypto can create very binary outcomes, right? So, and it depends on which geography you're playing, and it depends on who your regulator is. It depends on what you're going to do with it, right? So in my previous roles, when I've been under a US regulator, well, they didn't want you to touch crypto with a barge pole directly, but you can invest in futures, right? Whereas in some other geographies, you can have much more room and roll. Or you've got the ESG component that goes alongside it, which is, everything Bitcoin is bad because the mining is so toxic and using so much electricity when it could be used to power a country and, other things around it. Now, lots of that, if you really dig deep on some of that data, yes, you can poke holes in some of those arguments, but people don't care to get that deep. They hear the headline and they're like, that's bad, don't do it, right? So sometimes you have to, as having that responsibility associated to the parent, you might have had to make some of those difficult decisions as well.
And one of the things you mentioned in your answer was the alignment of the time frame. So I would be curious to know from you, how you judge the performance on making the world a better place, or SESG, over what period do you measure and count for your results? You mentioned, Ben, 2030 for the supply chain, 2040. Do you have any more immediate timelines in that respect?
I think they're more immediate because in order to get to 30 or 40, we need to be doing stuff today, tomorrow, next week. In the context of venturing versus what I would call our kind of business as usual, one of the benefits of corporate venturing that we see, and one of the reasons we got into the space when we did, was to be able to mix up the timeframes for strategic, or extend, if you will, the timeframes for strategic insight and delivery. So if I take an example of maybe one of our longer term investments who have an extremely world-changing ambition, which is to save 100,000 lives. So this is an investment we have in a company called Alstone Medical, whose ambition to save lives is based on a technology that they've developed, which is a breath biopsy, so finding biomarkers in breath for certain cancers. And as we know in cancer, the earlier you detect it, the more chance you have of survival. And we've aligned this to our health business. But that business is still in clinical trials. There's still many learnings that we can get from that to bring into the business. But it's not going to be a product on the shelves tomorrow for our health insurance business. It's 4, 5, 6, 7 years down the line. And the time frame that we look at from a ventures perspective is almost 3 to 5 years minimum and beyond. So there's a difference there from maybe some of the measurements that are kind of core to the performance of the main organisation. So there we look at let's call it 5 to 7 time horizon for venturing. On the carbon reduction, as I said, I mean that's starting today, and our annual report, if you could be bothered to read it, because most people don't, but
a few trees.
It should be fully digital soon. You will see those metrics reported on every year because they're important. Mm-hmm. Now it's not just about setting a long-term ambition; it's about the activity that we're delivering on a day-to-day basis. So that is much nearer term, but because it's, I guess, such a significant change that needs to be affected, it's why there's a kind of 30 and 40 ambition.
Thank you. What about you?
I mean, I think that like looking at sustainability as an entire theme is an area we spend a lot of time in, and we've looked at a raft of companies globally, right, in this space. Now, the interesting part is you can invest in a whole bunch of them, and they could be good, but it's really early in this space. And you're not able to always tell what's the differentiator across many of them. At this stage, you've got some of them that are serving the need of analytics and reporting, right? So they're taking vast amounts of data, giving it to you in some nice screen with some graphs and charts and things to fulfill whatever need you have, either you're reporting to clients or regulators or whoever. Or they're components of creating product around climate or other things. So, but you can almost go the other way, which is skewing to invest in this space because it's perceived as important rather than because it's strategic today or financially important. So you've got to balance the other side as well, and I think that's really important because we can go out and make 10 investments in the sustainability space and keep flying the green flag and do all of that stuff, but are they really companies that are going to help us? Are we going to be able to work with them tomorrow or not? That's also important. I feel in the corporate venture space, you've got almost a dual responsibility, right? So one is the responsibility on the investment, but you've got the negative impact you bring of if you invest in something and you partner with them and then you decide not to use them at some point in the future, it's sort of a much bigger impact on that company as a negative than if you didn't touch them at all.
I see. That is interesting. Moving on a bit in terms of theme, making the world a better place is often connected to SESG. Do you think of the 4 components of SESG, there's one that's more important or one that is weaker than the others, or are they all the same?
I think of them as equal, but they amplify differently in different audiences. So there are times when you'll be much more focused on the environmental aspect around it. There'll be other times when governance is critical, but it's sort of it kind of goes in waves as to which is spiking at what times. I don't know whether, Ben, you see a different view.
No, I'd agree with that. I mean, the temptation is often to talk, a lot about the E, if you will. But I think for us, and they're also inextricably linked, right? And there's a mindset and a behaviour that underpins each of them that I think is equally important, particularly as we were saying, whether on one end it's just tokenism, and on the other end it's actually taking these aspects very seriously. So, different times, as you said, different focus, but I don't think anything's more important than the other, over time.
I've always thought personally that governance was the weaker one, and I knew actually it was put there by a lawyer because that's how we make the money. So that was my thought.
I think on governance, it's the temptation is to think of it in a bureaucratic way, but I think of it more as as almost an insurance policy for growth and for success in the future. And I think if you can think of it in a way that is amplifying and supporting growth, then you kind of get past some of the more traditional views that it's all about rules and locking stuff down. I think it's about being responsible in the way that you build and scale businesses in our context. And I think you can get to a stage where if that's forgotten about for too long, then you're in real trouble.
Sorry, just to add on that one, I think the governance point is an interesting one, right? Because oftentimes we preserve the governance at a board level, and you don't tend to look deeper. Right? Sometimes you do, but you don't have data and measurement around much more beyond that. But in reality, over time, if we're able to utilize data much better to prove that the governance and the decisions made here are actually flowing through, they're actually impacted, they're making change, the leadership and layers below and management are able to get and make decisions, they're empowered in different ways, etc., all the way through an organization. That's much more powerful as a measurement tool than just saying the board is doing things right or wrong. Right?
Yeah. Thanks for that. And lastly, we have 20 seconds each. Is any of yours or your CEO's paycheck connected to improving the world or ESG performance?
I'm certain it is, but I don't have data to prove it. I'm almost certain it is. I mean, again, we're a private company that's family owned and long term, so everything is done for minimum 10 years, right? So everything's taken with a long term view, and every goal, decision, and basis is around that. So I have to believe that it is, but I'm not privy to that information.
So yes is the simple answer for us. It's embedded in our remuneration policy, and you can see that in how we report. So a proportion of that is absolutely tied to ESG metrics.
Well, thank you both, and thank you for the audience for having us here.
Thank you.